Hi, and welcome to the Market Alert for Tuesday, 30th of August 2022. So US stocks were subdued in choppy trade amid high yields following recent hawkish central bank rhetoric by Powell on Friday of last week at the Jackson Hole Symposium. Also, the UK was closed yesterday in observation of the August bank holiday. So everything back to normal today. And from Monday, well, everything's back to normal. All of the summer holes are over, so hopefully we'll see the volatility increase significantly there. Stocks and bonds sink as post-Powell pain continues. And stocks and bonds are sold as Jackson Hole rout emboldened by ECB's flirtation with 75 basis points. Blimey, they've gone from not moving interest rates to actually flirting, as it says there, with the potential of a 75 basis point increase. Well, they need to do that. I mean, they're at 0.5%, 0 to 0.5%, and inflation's running at 20%, isn't it? And if not higher. Economic news for today. What have we got? We've got German prelim CPI out at, well, that's all day apparently. I don't know why that's all day. I thought that would have had a specified time for the CPI, but apparently not. We've got one at 8 a.m. though for Spanish CPI. And what else have we got on high impact? Right, we've got consumer confidence, JOLTS, job opening, and FOMC. I think this week is Non Farm Payrolls again. I don't know where the days go. I really don't yet. Non Farm Payrolls this week. Anything from the Fed on Wednesday? Let's just have a look, see if we've got anything there. No, we've got the ADP, that's all. So yeah, non-farm payroll this week. Market will be looking closely at that. And the gold-silver ratio, silver continues to be crushed by the acceleration, or the, well, not acceleration, that's completely the wrong word, by the support of the gold market. So now you can get 92 pieces of silver for 1 ounce of gold, which is just staggering, frankly. But let's not get into that. Let's have a look at the markets, and we'll kick off by looking at the Dow. So yesterday, well, we can see we've got demand, can't we? Just look at the volume for yesterday and how the market didn't actually sell off with that amount. On Friday, we had a great big bar to the downside. The volume is far less than yesterday. You can't have this amount of volume that's greater than the previous day with the range less. You know that they're actually buying. Does it mean it's going to actually move higher? Not necessarily, but yesterday they were holding the market. They've got to get above the 50, the 5-bar moving average, and the 38% retracement there to make any progress to the upside. But we'll see. The market overnight in the 30-minute is higher, but is now starting to head back towards the DP, which is going to be a crucial area. It's kicked off in Iran, and the US are talking about, again, warmongering. So that could add to what's going on in Ukraine and Russia as well, and bring more downside to the market as well. Also, yesterday afternoon, you see they managed to move the markets up 100 points there, 200 points, 300 points in the Dow before it ran out of steam. Came back to the low, did an 89% retracement, and then moved lower before the close. In the German DAX, again, demand. Massive demand for yesterday holding the market. These are the upside targets. Again, you've got the 5-bar tying in with the 50% retracement of the move from Friday down to yesterday's low. And overnight, you can see prices also moving higher. So let's have a look at the 30-minute chart for yesterday. The market moving up. A bank holiday, as noted, but the market then breaking out and moving to the upside. Just before the Dow opened, this is where the Dow opened, so we had a bit of a move to the upside. No surprise really, if nobody's around they can move the market to the upside. We've gone through yesterday's high according to the 30-minute chart. Let me just double check this in the daily chart. Yes, we have. That makes sense. So the high can become support now. It's important that the market holds at this level. Noticed here as well, we've got Williams speaking later today as well in the news items there. So there is a Fed member out. Depends what he's going to say. If he's going to actually back Powell with his hawkish rhetoric. We'll just have to wait and see. In the 5-minute charts, let's just whiz back to yesterday's trading session. Like I say, I did an alert yesterday, but you still expect it to be choppy, and it was. Market just stuck in a range and then sideways all the way through through the morning until we got to mid-morning. And we just see the market then moving higher at lunchtime, and then sideways after the initial 300-point move in the Dow. So hopefully the volatility will increase today in the DAX, and you can see they're coming back to that high. Got the 50 MA there as well in the 5-minute chart. We've got resistance in the 5 and the 20 now on the upside, but nonetheless the market's moved higher on the overnight market there. So back to trading today. And in the S&P, well, you can see the demand again in the daily chart. We're oversold. We could see a bit of a move to the upside. Again, from this high to this low, these are the potential fib areas of resistance, and you'll see the 50 and the 5 tying in with the 38% retracement there. Very important levels to keep an eye on. And in yesterday's S&P, you can see the market choppy. We then had a move to the upside. Not a great deal, but overnight the market has moved higher off the DP, run into trouble at the 50 EMA, and watch the DP. It's going to be an important area for support for this market. If it goes through, you never know, we may actually see a test of the lows, and that's going to be dependent on geopolitical and economic rumours of what's going to happen with rates. The FTSE, well, the strength is huge. Look at this for yesterday. Massive volume for the FTSE yesterday to hold it at 38% retracement, which we had drawn in, back above the 200, back above the 50 there on the upside. The strength in this market is remarkable. It really is remarkable, given the backdrop of the energy bill increases, the strikes, the potential inflation of 18% on the CPI. The RPI is already running at 12.5%, and we know they're only half of what we're actually seeing. And yet the FTSE continues to move to the upside. And if we look at the 30-minute chart, you'll see it's nice and strong at the moment, despite the fact that we have come back to 89% here, where we could see a bit of weakness. So it'll follow the other markets. It's just stronger on the pullbacks that we're seeing at the moment. In the currencies, the yen is sideways, as it has been for many a day at the moment, reversing overnight from yesterday's reversal to the upside, coming back. In the 30-minute chart, we're just below the DP there, but yesterday, market up, we oversold, we retraced, we moved to the upside, and then we've seen the market move lower. Sitting at the 162 level at the moment, we need to get back above that DP if we were to attack or have any chance of attacking the high of yesterday. The pound also showing demand for yesterday as well, along with the FTSE, sideways on the overnight narrow range. Again, bank holiday in the UK yesterday, but despite this retracement, moving up to the close of Friday and the low of Friday there as well, and then just becoming sideways, very narrow range, but finding support at the DP at the moment. It needs to move higher and take out the high to stand any chance of having any momentum to the upside, but that's dependent on the US dollar, of course. And in the metals, yesterday the silver market managing to move higher. It's already been hammered overnight, as you can see there. 89% retracement is going to be important. As I said yesterday, in the monthly charts, we're still looking around the $14 level. If it gets that low, also back below the 200 MA there, the black line, and 62 as well. So still showing weakness in this market, hence the increase in the gold-silver ratio. In the gold market yesterday as well, you can see a bit of buying there, a bit of a pullback overnight, but nowhere near as much of a pullback in the gold market that we see in the silver market. 30-minute gold moving strongly back to the upside yesterday, trading up to the DP and towards the 200 MA, and then sideways, a bit of a shakeout overnight, but sitting on the DP at the moment. US dollar yesterday, bit of weakness, which is why you saw the demand in the pound and also the up move in the yen. But despite this, the market's still above the 5-bar moving average and could quite easily move back to the upside there. So watch the 109 area if the dollar continues to move to the upside. The consensus at the moment is a 75 basis point rise in US rates on the 17th of September. So we've got a couple of weeks yet before we see any sign of that being priced into the US dollar. So we could see the dollar going sideways unless the war situation escalates in Iran that we're seeing overnight. Okay, that's it for this one. Oh, actually, talking of war, crude oil up massively yesterday, back above 104 on the October contract. I think, yes, it's the October contract. V is for October in the futures market. We're at 89% retracement here. From there to there, you'll see there we're stuck in this area at the moment. But you're going to start to see the price of fuel moving to the upside once more for both petrol and diesel, unfortunately. Anyway, that's it for this one. Let's see what the futures do at 7 o'clock. It's 6:30 at the moment, so hopefully you'll have this before the futures open. Have a great day, and as ever, thanks for watching. I'll see you in the next one.